Okay, good afternoon everyone. Welcome to this webcast which is hosted by Reach Markets. My name is Warwick Lace. I'm the Head of Investor Relations at Reach Markets. And today we're joined by Spirit Telecom CEO Sol Lukatsky. Spirit trades under the ASX code ST1. So pop that into your watch list to keep tabs on the company. Some of you will be familiar already with the Spirit story, but hopefully there are lots of investors online that are new to the story. And for your benefit, Spirit is a fast-growing challenger brand in the Australian telecommunications industry, and Spirit's aiming to disrupt the industry. As you'll hear today, they have some big and bold growth plans to pursue over the next 12 months. Obviously, with everything going on around social distancing and COVID-19, we think it's just a tremendously exciting time and space for digital connectivity providers, and Spirit is certainly up and about and looking to secure its position in a rapidly growing and changing industry. Quick housekeeping matters. This is an interactive session, so an opportunity for you to really engage directly. Ask Sol questions. Please just type those questions into the questions area in the go-to panel. Once Sol's gone through the slide presentation, we'll get straight into answering those for you, get through as many as possible. We're always interested in your feedback about these sessions, so when you're done, please just take a couple of seconds and pop in any comments about the format or areas for improvement, or just thoughts on the company. Always very useful, and we do send those on. Any advice or information in today's presentation is general in nature and does not consider your personal circumstances. You need to consider for yourself whether it is appropriate for you. So with that said, let me just unmute Sol quickly. Sol, it's time to present to Spirit Telecom to us today. Clearly been a busy year for you, and financial year 2021 looks like being shaping up for another momentous year. So,
thanks, Warwick, and good morning, everybody. I'm just trying to get control over the slides. So the presentation today will have three components to it. First of all, for those who are not familiar with the stock and the company, I'll provide just a quick understanding of what we do in the most simplest form. So you don't need to have to be a technologist to understand what you do. You'll understand it because you live it all day, and if you're in the office or even at home, in terms of the way that we interact with our customers. So a little bit about Spirit. Originally, Spirit started in the consumer world, putting fixed wireless internet into commercial buildings and consumer buildings. We've grown to become far larger than that in terms of what we do today. So the easiest way to explain what we do today is, and imagine we are the IT&T provider of Officeworks in Australia, albeit still at a small size. So if you walk into Officeworks today, you have one aisle where you have your paper clips, your paper, you may have your highlighters, your computers. So what we've done over the last 12 months is build a modern version of those aisles. So in aisle one, we have internet and data, and that is sold off our network and also off an aggregation platform, which is called Spirit X. So we have our own fixed wireless network across Sydney, Melbourne, Gold Coast, Geelong, Morwell, and we sell off that network at around a gross margin of 73%. Now, obviously, our network, and Australia is a large country, we can't hit that particular client with our network. We sell off a third-party service at a lower gross margin, but there's no capex. So the end result is still very profitable to the organisation. So when you're thinking about the stock, think of what I call us as a modern telco. And a modern telco has a range of internet services, data services, security services, and we bundle all those products for small businesses. We do those for hospitals, schools, and essential service providers, as you'll see in the portfolio in a minute. But I guess what I'm pretty proud of is kicking off a presentation and giving you a trading update during a difficult economic environment, which is still showing tremendous growth and very strong results, and not one-off results, but recurring results. So probably the first slide before we go more into the company is one that we used in our trading update to the market only a couple of months ago, or less than six or so weeks ago. So a couple of the numbers here have actually moved dramatically in a good way as well. So just to give you a perspective in terms of growth rates, for the same 4 months last year, we're basically at a revenue of $5.8 million. For the same 4 months for 2020, we're on a run rate of $14.3 million. So you're seeing $4 million months coming through the business as it stands. But the best part of that, and this is before the VPD acquisition that we'll talk through later, is that there is a material component of that $4.3 million which is recurring, and that is contracted revenue. So if you're looking for a growth stock, but you're looking for a business that has annuity revenue streams coming through, that's what Spirit is. So I've got a part telco background and a part banking background, and I like to build annuity-based businesses. And this is what we're doing here. As you can see, the proportion of recurring revenue is very material across our portfolio. So as you can see to the right on a simple graph, of the $14.3 million, 18.6 is recurring. And that's just not recurring at a goodwill status, that is contracted revenue. So we're now signing our data contracts on average for 36 months. Why is that important? Well, because as an investor, annuity revenue streams are vital in this market. So we're in a high growth segment, but still we're in a volatile macroeconomic market. But you have here a stock which has just kicked over the 100 mil capitalisation mark, which is strong on annuity income. So in percentage terms, for the 4 months, January, April, on the previous year, we grew at 146%, a mixture of organic and a mixture of acquisition as well. On the recurring side, we grew 60% to $8.6 million, right? On the B2B side, we have a small consumer portfolio. We grew the recurring revenue for business to business at just under 100% or 92%. We also added solutions and projects revenue. So to kind of give you an understanding of what that actually looks like, when we walk into a business and we provide them the high-speed internet security, they may not have the infrastructure to allow us to execute those services. So what we then do is potentially do a refresh and move them to the cloud, or we may actually refresh all their PCs, all their servers. So that solutions and project revenue is very critical to allowing those businesses to move to cloud services. And at the same time, when we pick up the recurring revenue, we're obviously doing the solutions work for that organisation. You know, in kind of what's an example? So we do a lot of work in professional services and hospitals. So you may think that, you know, we've got legal firms as an example. When they moved to COVID and they were working on a VPN connection, they couldn't actually execute because none of their any of their systems are in the cloud. So we're helping those type of businesses to be able to work remotely or from the office in this environment. So we are seeing structural change that is occurring in the industry. And we're doing some very innovative things, but I always like to say we're actually inserting ourselves into a structural change. And as an investor, when I see structural change occurring, they're in the stocks that I want to be part of, and Spirit has inserted ourselves into there. The next one is more a kind of a commercial view, and these slides were done only, I think, a couple of weeks ago, and I'm pleased that that 90 mil market cap is no longer, and we've certainly gone over the 100 mil mark over the last 2 weeks, but we've got plenty in us, and many of those sophisticated investors would know that the 100 mil market capitalisation opens up a new range of small fund managers who are beginning to look at us, and we've certainly had good inquiry levels as well. So quite a milestone for us. We're at that nice size, we're on our way up, but there's still value for investors just ticking over that 100 mil market cap. And as you would know, there's a lot of consolidation occurring in the industry as well. So we're not just strong on the growth side, we are certainly part of the consolidation and being considered as part of the consolidation as well. Just in terms of recent upgrades, only yesterday, Shaw's Stockbroking, and if any of you are Shaw's clients, upgraded the stock, and we are now a buy at 34 cents. So I'll just go through that again. If you're a Shaw's, if you want to get access to that report, you're a Shaw's client, the equities analyst there, Shaw's upgraded us to 34 cents as a buy. So if you're a Shaw's client, please access that report, and that'll give you an absolutely detailed view of that analysis after the VPD acquisition. So really pleased with that upgrade, and it shows we're not just executing, so we're not just putting strategy forward, we're actually executing in the marketplace both organically and through acquisition as well. A couple of other notes, obviously that $14.8 million was pre-acquisition, so we will take $6 to $70 million out of that and part of out of the CBA facility as well. So those numbers are pre-acquisition, and the cash component of the acquisition upfront is $6 million, and there's another $1 million potentially later in the year once we've closed their books for their 2020 year. In terms of acquisitions, VPD, and we'll talk about that in a minute, is our largest, but we're very active in that space. So we've got a good pipeline of acquisitions still. We will at the same time make good decisions. So if you've been on my calls before, we will be active, but we'll pay fair value. So if you look at what we've paid for VPD, what you have there is what I call a smart deal. It gives the vendor upside, but it gives Spirit protection as well. So I won't do deals which are all up front, because I don't think that's in the interest of shareholders, and it's certainly not the interest of the vendor as well on that deal. So they're the kind of deals we do. Will we do more? Absolutely, but I'm not going to go into timing on that, because we do deals at fair value and they've got to have strategic fit. So that's a mix in terms of our trading history and a little bit about us. Just about Spirit, I've covered most of these points, but for those who have not been on the call, we'll just cover them again. Really strong recurring revenues, diverse portfolio. So business around 37%, education 47%, and education in there is private schools. No exposure to higher ed, which is not an area that we want to play in. Health, so essential service providers, very strong. And on the VPD acquisition, what we'll add there is mining, which is very resilient in the current markets. Aged care, which is health as well, very resilient. And the other industrial. So what we're now seeing is we're taking advantage of that New South Wales, Queensland corridor, where we were predominantly very strong Victorian business. So diversification in this portfolio is vital, especially in this macroeconomic market. In terms of our history, we've completed 7, now 8, up to 9 telco and IT acquisitions. Our own fixed wireless network runs at a 74% gross margin. Probably our biggest achievement internally over the last 12 months has been the building of our own intellectual property. We've built Australia's largest aggregator of B2B internet services, which is called SpiritX, and I'm pretty proud that was one of the reasons VPD chose us to come and to be part of that organisation, because their products are going to go into that platform. For those in terms of not understanding what it does, it's the iSelect or the Kogan of internet services. So one of our board members, Greg Ritter, who's the chairman of Kogan, who came on the board last year, was pretty impressed with the platform when he was considering joining the Spirit board, because he could see that the aggregation of those services had similarities in other markets as well. So we're now, and I'll repeat it, the largest aggregator of B2B internet services, and we will be putting the VPD cloud and security products into those as well. Competitive advantage, so we offer symmetrical speeds of our own network. Why is that important? Up and down speeds are critical when you're moving files, and files are only getting bigger. What do we want to be? We want to be the one-stop shop for SMB, IT and telco services. There's a real gap in the marketplace there. People say, well, why can't Telstra do that? Well, I urge you to try to call Telstra or call Optus and see if you can get through and speak to anyone and have a sensible product conversation. So we're innovative, we're nimble, but at the same time, our competitors are letting us take market share and do it in very quick succession because they're not picking up the phone. And sometimes you don't need to be brilliant, you just need to pick up the phone and have a conversation, and old-fashioned service still works in the Australian marketplace. We sit in high-grade segments, so cloud, security, infrastructure and IT supports. These are all new world services that modern telcos need to provide. We are aiming to become the modern telco of Australia. While others sit in their hands and wait, we're executing in this marketplace. And obviously the other part is Sky Speed Internet. We're advertising on Sky News, AFR.com and all the mainstream channels these days as well, with the Sky Speed Internet ads that you make. So that's a little bit more about Spirit. Covered this a little bit, but I'd maybe just slow the pace down to explain what we're building here. And a lot of the fund managers really like this slide because it simplifies the moment for them. And what this graphic shows is, in the past, what internet providers have done is only provided effectively the internet service. And for a business, that would be around $600 to $1,000 a month in terms of that service. So in terms of what we used, if we sat here 18 months ago, We would walk into a business and we would sell them a 500 speed connection, and we would charge them $600 to $900 a month with $2,500 worth of fees. And we'd pat ourselves on the back and say, job well done. Well, if you sit back for that and think about it, it's quite silly. Why would you walk in and give them the road and not then also provide them all the over-the-top services if you've given them the road with high-speed internet access, right? You've talked to the customer, you've developed a relationship. They only really want to talk to one service provider, so why would you not sell them the other services? So what we've been building through the acquisition is the capability to execute and bundle all those products. And in economic terms, that $600 a month becomes $3,000 a month. For the larger multi-site clients, it becomes $40,000 a month. So the economics is good, the revenue is sticky, but even better, the client gets one bill. They get one service level agreement, and they call one provider if they've got a problem. So if you've ever been in a business and you've had an internet issue or a network issue, and you call someone and they say to you, oh no, so it's not our problem, it's your network or it's the internet provider. Well, this model changes and flips it on its head, because it allows us to see the network all the way from the internet inside your business. So we can identify the fault straight away. That means when we know where the fault is, we can fix it straight away. So that business frustration is gone immediately. So the economics are good. The client gets what they need. We get the scale. And the best part is nobody's bundling products and services in this way. You might have one provider, right, who grabs the jigsaw products from many, but not one that does it in this way and executes. And on top of that, that road, we own that road. It's either on our fixed wireless network or it's on our digital platform as the largest aggregator. So as I say, regardless, we're going to sell something to you when we talk to you. And I think that's important in terms of being a mainstream telco player. So BPD, in terms of why we're probably most of us are here, is a very large, privately owned, now publicly owned part of the Spirit family group, a company that we identified actually in January and began speaking to the vendors. This has been a 7-month piece of work, and I'm pretty proud of this acquisition, and not just the acquisition itself, but how we were able to get that over the line, because we did beat competitors to this deal, and the vendors still definitely had choice, and they chose Spirit. And you may say he's just making it up. Well, if you have a look at the script component the vendors have taken, they trust in our strategy, they believe in it, and the reason they came with us, and these are their words, is because we believe in the leadership team within Spirit, we believe in their values as people, and Spirit X platform as a piece of technology, right, is something that they thought was incredible, and they could see their product. So I didn't have to twist their arms to take more script or more shares. That was their choice, right? And I'm pretty proud of that deal structure. So in terms of deal structure, paid on a 4 times multiple of EBITDA. We've held back $1 million of that deal so we can close FY20, just to manage some of the IFRS changes coming through accounting standards. 2 tranches. They'll get another 1 times if they hit their EBITDA in 21 as well. And if they continue to grow, they will get an overachiever through 22. So total deal size, if they can get the EBITDA at 5.56, the boys can certainly earn more money, and then that's good for Spirit, and that's good for everybody. So protection for Spirit, and certainly upside for the vendor, and those guys are now hungry and part of a larger organisation as well. Didn't talk about it on market as well, but we'll invest a considerable amount of CapEx into that business. Probably not CapEx in terms of their OPEX, a little bit of OPEX and CapEx in terms of rolling out their dealer structure, which I'll talk to in a moment as well. So their product's going to Spirit X, and then that organisation gives us channel, which is really important. So transaction rationale, touched on these, but I think it's always important to understand the detail. Clearly, with their channel partners, we can now distribute our products in New South Wales and Queensland, but we'll also look at putting 100 other channel partners on in regional Victoria, regional New South Wales, regional Queensland and WA as well. And we'll look at South Australia through 21. So a lot of the, and I've talked about this in another presentation, a lot of the larger telcos are pulling out of some of their dealers because they haven't been able to give them these modern products, right? What we're going to do is give these dealers modern products, security products, high-speed internet, who have been starved of modern products. You know, they've been selling a little bit of NBN and a few mobiles. Businesses need far more sophisticated products these days. They need a managed Wi-Fi solution. They need a cloud solution. So we have all of that. And now what VPD has given us is the channel structure. So imagine if it's a layer of cakes. You know, the first layer was to get the product set right. The next was the platform, which was SpiritX Digital. And then the third and final piece to the puzzle was adding VPD to give us channel and distribution. So new verticals as well, mining, industrial and aged care on the left. And then we scale, you know, it's a 15, you know, we're kind of a run rate now of $75 million as a business, really good EBITDA coming through. And then that business on itself will be our wholesale channel. So what we'll do is we'll put all our partners, our current partners into that channel. So on a monthly basis today, only 30% of our deals come through wholesale partners. With VPD, that will be a material change in terms of what we're going to sell. So only yesterday, to give you a simple example, we opened up and gave logins to the SpiritX platform to 10 of their salespeople who control another 20 business partners. So you can see there's a really incremental multiplier effect happening by putting these two businesses together. New product, new channels, the digital platform, and that's how the puzzle works. So that's the transaction rationale at the high level, but hopefully you can see execution in there as well. VPD customers, so probably, and I've done a lot of M&A work in my career, and I think this is my 25th deal. Probably one of the strongest portfolios I've seen in terms of how these guys have built this business, 12 to 15 years. And I have to say, they are better than we are, well, they're part of the group now, at bundling products. So their ability to bundle a cloud product, a security product, a managed service product is first rate. And also in the way they bundle that. And their ARPU in their top 20 customer range is $17,000. So why is it 17,000? Because they're bundling effectively. An average contract length's at 41 months, which is incredible. In fact, you know, when we kind of announced the deal, we had customers call and extend contracts in terms of getting their confidence. So really strong book of clients, but what it tells me is we're not just buying an asset. I think, and as I said to my leadership team on the morning that we announced it, we can learn a lot from what VPD does in terms of bundling as well. So, you know, we're ambitious, we're hungry, but we're humble enough to say we don't know everything. And then there's a lot that these guys can teach us around distribution and bundling of products as well. So that's the philosophy in terms of when we bring these businesses in. And clearly Jason and Luke, Jason will become the Chief Technology Officer of Spirit and Luke will be the Chief Sales Officer for the wholesale channel. So we haven't just bought an asset, we've bought two, you know, there's 50 people in the business, but Jason and Luke will become key executives and then we'll integrate into the business as well. Okay, so sometimes it's best to do a kind of a screen view to give you a perspective. So on the right-hand side, you have the SpiritX solution. So SpiritX solution, and anybody can actually go and look at the SpiritX solution. If you go to spirit.com.au and then look at the business products and click a button called check address and put your address details in, and it's okay if you don't put your real one in, but put something in the metro area, you can search for all the data products across Australia. Right, so what you have here is a partner or wholesale view, but if you're a business, you can go into a similar platform and you can search and order data products. So what this is representing is on the left-hand side, you have the live Office, PBX and Box and Cloud products. They're all the VPD products. So what we've begun as of yesterday, we've begun integrating those products into that platform. So what you have is those partners now being able to sell a business, partners and resellers and dealers, a internet product, a cloud product, a PBX product and an Office product. So we had some of those products before, but they weren't productized in the same way and easy to sell. So what we're doing for our dealers and the dealers who grow, right, we're increasing the ARPU and the size of the invoice they can sell. We're making it stickier, and we're selling through the entire business. So that dealer and that partner now walks in your business and said, I can provide you with a high-speed link. Now I need to talk to you about your managed Wi-Fi. Now I need to talk to you about your security. Then we have to talk about if you're going to move into a cloud or a server-based or a private cloud package. And then once we've sold you all that, we may need to refresh your infrastructure. Once we've completed that, who's going to manage it for you? Can your office manager handle and make sure that all your security and all your cyber security is actually active these days? So, you know, one of our, unfortunately, and it's a bit of a, I don't like to use an example, but it is when businesses haven't taken cloud and security seriously and they get hacked, right? And the third largest lead generator, unfortunately, in a perverse way, for Spirit is when businesses come to us and they've been hacked and there's ransomware. So apart from marketing on Sky News, AFR.com and Google, our lead generation is that the market is now seeing security as a real issue. And as you'd know from the media, even the federal government got hacked. So if they're hacking the federal government, imagine what they're doing to SMEs. And so these products are all secure products. Once again, an example of how we're simply integrating ourselves into a structural change that is occurring in the market. And that is what you'll see. But we're doing it in a way through a distribution mechanism which is digital, through the X platform, as you can see the screenshot there, with modern products. And that's where the other telcos haven't been able to execute. They've just shoved NBN and some mobiles. But businesses, I mean, you can buy that these days, a mobile, you can buy a mobile at a supermarket, right? And that's why those dealer groups have been forgotten. We're going to change that in the industry by giving the products that businesses actually need and want, you know, in 2020, especially given the COVID crisis that's occurring. So that hopefully gives you an example of how we're integrating on the left, the VPD products, and then into our platform. And if you are interested, go on to spirit.com.au, click on the connect, go onto the business internet and do a check address, and you can see the platform live in the marketplace. And that platform is a version of the one the partners do, although the partner one is a bit more sophisticated as well. Yeah, so this is, I won't go into detail, but this is what the model, this is a slide straight from VPD. I'm going to admit this is not a slide that I built. We brought this out of the information memorandum when the business was being bid for. So what the guys have done is built a very sophisticated dealer structure. The model actually comes out of the photocopy or the Xerox model. But what they've done is they've modernised it and they've brought modern products into it. So they've got partners, and but they hold their hand and they train them to sell these more sophisticated, complex products. So this is a model, a little bit of old world with modern products. So because these deals are still complex, relationships are important, training are important. So our aim is to move these products through these channels, but we're looking at putting 100 new dealers on. So that's 10 times over the next 12 months, 10 times more dealer groups, because those guys, the Optus business centres, the Telstra ones, are no longer there. So we'll take advantage of that opportunity with modern products using this model. So I guess to finish off before we move into Q&A, got a really simple strategy in terms of what we're executing to. On the left you have organic, which I've talked to, where we bundle the products, and obviously VPD products will go into SpiritX. Trident, which was the other large acquisition we did in February, about 60% of that business is already integrated. The finance function, the sales function, and part of the operation function has already been integrated. There's 7 acquisitions we did last year, fully integrated across CRM and sales. So we don't just buy assets, we integrate very well. Our Chief Operating Officer, Mark DeGuardia, we work very well together. I work the capital markets, investors and strategy. He is the ex-CIO or Chief Information Officer at IONET, obviously, and has had board roles through Asia in large telcos. So he's very detail orientated and does an amazing job integrating. We think we can pull around 1.5 mil of OPEX out of these acquisitions, but I would say to you, this is about growth, not necessarily pulling OPEX out, but we think we can. On the right-hand side, we'll continue to acquire good deals. We still have a very active pipeline of acquisitions, and in fact, they're growing by the day. So we are now at a point where we used to be hunting, but I probably see a deal come on my desk every second day these days, and and therefore what we've also done is develop the framework with earn-outs that people know how much we're prepared to pay. So where we're heading, we're a bit ahead of schedule probably, we're around that 75, 80 mil calendar year mark. And 21, we want to move out of that growth phase a little bit. Sorry, not move out of that growth phase, but accelerate our EBITDA at around 15%. So that's the Spirit story. I hope it makes sense to you, and I look forward to, as best I can, answering your questions.
Fantastic. Thanks very much, Sol. Maybe just to kick off, a bit of a bigger picture question from Dave. So could you just talk to the landscape, the small telco landscape? What do you think might sort of happen in terms of consolidation in the coming years?
So a landscape question, Warwick, was that it? Just pick that up.
That's right. Yeah, just sort of a big picture. What do you think might happen in the small telco landscape?
Yeah, so I think what you're seeing is because at the middle market, the top end market, you've got no growth coming through, but you've got growth coming through organisation from Spirit and a couple of others. You will see, I think, an acceleration of consolidation because if you do have a market and the GDP and a macro market going backwards, the only way to extract synergies and higher EBITDAs is for there to be mergers and acquisitions in that particular sector. So the only other, in the larger ones, they're going to cut costs, but at a certain point, they can continue to cut costs, and I'm happy for them to cut costs. All it means is they provide a more inadequate level of service. So look, I think there will be, I think what you'll see is an accelerated, and you've obviously seen a number of deals come through the market with Opticomm and Unity, and obviously Unity had a crack, tried to take us over last year, but that wasn't to be at the time. So I think you've seen the acceleration there. We actually work with Opticomm. We do a fair bit with Opticomm already. We're actually partners with them on a large piece of work in which is in Tender in New South Wales. So we pretty much work with everybody. So I think there will be consolidation. There has to be. When you've got little growth, you've got price deflation coming through data, there will be some level of consolidation. History tells you that, and the economics of the industry dictate that as well. Scale means greater margins and extraction from suppliers. So that's probably the best I can answer it. Off the top of my head, Warren.
Yeah, very good. Thanks for that. In terms of sort of Q1, Q2 of this financial year coming up, what do you think the VPD new channel sort of adds to the mix?
Yeah, good question. I think what you'll see is pretty aggressive rollout of dealers on a national basis, and that will be twofold. So we know we've already identified about 50 of the dealers already in terms of who will come on board, but there will be some that will acquire as well, and I can't obviously go into that detail, but pretty much you'll see the VPD products integrated into the SpiritX platform, and then a mixture of organic and acquisition around bringing dealers in, and we will be national, then we'll regional and across those capital cities as well. So products into X on the digital side to allow the platform to function for those dealers, and then a very aggressive rollout of those dealer groups across Spirit through Q1 and Q2. Additionally, what we're seeing now is because we're national, we're marketing through Sky News, AFR.com. We've got a lot of, our lead flow is at its peak. So what we'll be able to provide those dealers is a national brand, and also we'll be able to provide them leads. So we generate, at our peak 2 weeks ago, we generate 170 B2B leads a week. So, and that was national. And that's why VPD is quite important. Demand is not our issue, it's distribution of product. And, we generate 600 to 700 B2B leads a month in the business in its current form.
Thanks for that. A few question from Simon. Do you feel the need to add managed mobile services to the portfolio? And if so, how would you do it?
Yeah, my answer is it's in the top 10 of products that we're looking at, but probably not top 5, because we will add it probably somewhere through 21, but it's not a priority because there's no competitive advantage in it. We now have competitive advantage in private cloud and public cloud. So my view is always, when you make a product decision, the first gate or the first decision tree you have to go through is, do you have competitive advantage? And on mobiles, it's commodity. So if you have no competitive advantage, we will do it, but our competitive advantage now will be around the bundling of cloud, security, managed services in our network. So yeah, it's in the top 10, but I think to be another me too with mobile products, it's not a priority. There is an enormous margin in it, and we have no competitive advantage. So we'll do it, but we'll do it once we've actually executed to the products where we have greatest competitive advantages and better gross margin, as opposed to looking at mobiles at this stage. So I'd say in the next 6 to 12 months, we will do mobiles. In fact, look, if somebody wants it, we can do it today. I kind of flip the answer and say, do you want to focus on it when you don't have competitive advantage and it's a commoditized market? No. So we'll focus on the products that give us best gross margin, and then we'll add mobiles over a period of time. But we can sell mobiles today. I don't think it adds a lot to the to the competitive advantage in the marketplace.
Yeah. Okay. Maybe while we're on sort of product set, could you just you spent some time on VPD, but just recap the products that VPD bring to Spirit?
Yeah, sure. So their largest product set that is actually our smallest and why it's complementary is the cloud product set, and they do private cloud and public cloud. For those who are not technical, what does that mean? It means all your applications either sit in the cloud on a Microsoft server or in our own infrastructure, and they have the highest Microsoft license to allow to do that, which means greater gross margin. So they give us that cloud product range. Why is it important? Apart from really good margin, how do I say this? It makes client really sticky. If you control the client's internet, their network and managed service in cloud, the chance of them going somewhere else is really, really difficult. It's just a nightmare to migrate. So the stickiness, so how do we deal with churn? We add the cloud product and the managed service product into the client bundle. So they get cloud and security in terms of that product range is where they give us enormous capability now.
Okay. Question from Shao. Hope I got the pronunciation right there. What is the profile of the VPD dealers? Are they small IT consulting businesses? And
we've got both. They've got small consulting, but their main channels are large resellers. Everything from system integrators to large print and document dealers.
Okay. Question from Andrew. It sounds like VPD were sort of growing strongly themselves. What attracted them to Spirit? Why did they agree to the deal?
Yeah, good story. Yeah, really. Look, I approached them in January, and as I mentioned before, and I wish the guys were here. But I mean this genuinely. You know, it was around the people, our leadership, and we almost repeat each other's words in terms of strategy on bundling. But the SpiritX platform, they did have a choice, Spirit and others, and that digital platform, in terms of the intellectual property that we built and own, was something that I thought was quite incredible. So, apart from our values and who we are as people, and we got along and really believed in each other, the intellectual property that we built in that distribution platform, SpiritX, and if you're interested, as I said, go to spirit.com.au, go and connect and check address, and you can see the platform playing and doing its thing there. So that was the components. But I haven't kind of discussed this story before, but honestly, we did a cap raise earlier, and I thought that VPD, I didn't actually believe we could do the deal on VPD. I thought the probability was low, but there's a lot said to be picking up the phone again and asking the question over and over again. So if you're in business, pick up the phone and ask again, because resilience and asking over and over again sometimes pays off, and that's the moral of the story of being able to get this deal over the line. And sometimes it wasn't that complex. It was asking one more time and then building relationships and then being authentic and getting the deal over the line. So we did the cap raise, and not based on this deal. but I'm pretty proud that we got this one over the line based on who we are as an organisation.
Yeah, very good, and probably a good positive one to wrap it up on. Sol, thanks very much for your time today. Thanks to the audience. Please remember to leave feedback about the session today, any thoughts that you might have, how we can improve these webcasts. Sol, perhaps just a last word from your side?
Oh, look, first of all, everyone's time is valuable, so I'm very grateful for everybody joining the call. If you're looking for a growth stock, which has now hit the 100 mil mark and is doing really amazing things, and we'd love to have you on the register. And thank you once again for your time today.
Fantastic. Look, best of luck for the coming year. We'll keep a close eye on the progress. I think that concludes our session for today. Everyone, go and check out ST1. Add that to your watch list. Stay updated with their story. We'll be sharing a recording of this webcast in our newsletter tomorrow. So keep an eye open for that. I think that's it for now. Thanks everyone. Keep well, stay safe, and chat soon.
Thank you.